for what could be.
Thank you.
Nilesh Shah, MD and CEO, Envision Capital, with us to talk about that. In a bit, we'll also get in Mr. DP Singh, DMD of SBI MF. He joins us as well. Great having you, gentlemen. Thanks so much for joining in. Nilesh, not quite what the exit polls were suggesting, and it seems to be a razor-tight match right now for the BJP to reach a number of 250, let alone 272. Does this disrupt the optimism for equity markets from a medium term? I mean, I know the long term is great, but from the medium term, the next 6 months odd, does it cap valuations? Does it cap sentiment, or not really?
No, surely, Neeraj. What we are seeing on the screen today is totally in difference to essentially what we saw on the exit polls or what was the popular opinion. So I think to that extent, if the numbers actually pan out the way what we are seeing on the screen right now, this will surely act as some kind of a short-term speed breaker. While I totally agree that nothing really changes from a long-term perspective in India's economic prospects, but clearly in the short term, as far as the markets go and select pockets of the markets go, this will surely act as a speed breaker.
Nilesh, hi, good morning. Tamanna here. I was just looking at what is green on the screen, and there's a lot of FMCG stocks as well, HUL, Britannia, Nestle. You could argue it's defensive play, but also is there a sense if this is what the final number looks like with the BJP 272 and sub 272 by a distance? Then the focus on rural distress increases, maybe more freebies, or you would call it more subsidies, etc. And then the focus is very squarely on bringing the rural economy up to par. And maybe that's what you're also seeing on the screen. So a bit of policy shift, if this is the final number that you have, NDA, third term, now the number at 292, but you have an NDA with a little bit of a different shift, which is not too eager to seem like they're only catering to those watching this channel or trading in the market right now or to corporates, etc. And that shift will be perceptible in policy push. That's what the street is looking at today, isn't it?
Clearly, yes, there is going to be some bit of a risk off mode for the markets. There's going to be a shift towards defensives. Clearly, the best candidates for a defensive trade would be FMCG, IT, and pharma. This drive essentially will probably outperform or is best poised to outperform, at least till we have the political uncertainty kind of going down. So I clearly believe that, yes, these are some of the sectors which could do well. Particularly FMCG, I think, is a strong contender for outperformance, not just because of the risk off mode or because it's a defensive bet, but also because rural spending has already seen green shoots. Rural spending, which was kind of quiet for maybe about last 2 to 3 years, that's essentially seems to be bouncing back. So that's first, and two, there's been a cool off in crude oil prices, and that's obviously good news for FMCG because that's a key raw material, at least crude oil based products, which will drive gross margins, drive net margins, and will drive earnings. So I think right now there's a confluence of several positives for the FMCG companies and for all businesses which are oriented towards rural spending. I think two-wheelers also fall in that category. So this, I think, overall as a pack is expected to outperform at least between now and July, when we see essentially the budget for the full year, which will definitely give us a glimpse or a canvas of policy reforms and what to expect over the next few years.
Mr. Singh, good morning and thanks for joining in as well. Would you echo that we may see a different policy, because in order to form the government this time around, support of allies is also necessary, and if the UP verdict as it stands is anything to go by, there seems to be a question mark on the capex drive, so or maybe so. So I'm just trying to understand if you think the markets would think like that.
No, good morning. First of all, yes, I partly agree with what Nilesh has said. But at the same time, the capex cycle, I don't think that will happen, because in any case, the employment generation or employment what is being an issue is now the more employment generation has to come from private sector rather than the public sector. because that now the position which was taken. So the capex cycle you specifically talked about UP, and I think that the things are going to continue the same way, because these are the elections, and it's more than sentiment. We have to talk of the arithmetic also. When SP and Congress were fighting together, and if we look the old numbers also, there was likely that there will be some surprises. Actually, the exit polls were a little surprising, but that was there. These numbers are not surprising, honestly speaking. But I think with the one thing is coming clear, that NDA will form the government. It looks like as of now, but as you say, we in mutual fund, we always play a long game. We never look at the short term or very medium term. So we are absolutely right. India growth story is intact. Capex will continue. And I don't think immediately after the election there's going to be a big shift in the policy that the freebies or other things will come in for. I don't think so. The major event is going to be monsoon rather than the political thing. We are confident that we're going to continue. But these one day 2,000 points plus and the other day 1,500 minus, these are okay. These are the things which are expected in this hyper political activity. But overall, we are quite confident that we will continue to be in double-digit green zone over the period of time.
The Nifty's back at its day's low point, 700 points off on the index. A little bit of recovery that had come through has also now given way. 22,543, a 720-point cut on the index is what we are seeing. Bank Nifty looks weak. Nilesh, just before we went into this event, for the last couple of months, there's been enough and more chatter about a price correction, a time correction. We withered all those storms, to say the least. But there have been an enormous number of portfolios that have been sitting on some amount of cash or dry powder. Do you feel times like these, or maybe today, is an opportunity to upfront a little bit of that dry powder?
Maybe yes, Samina, to a small extent, but I think investors would probably be well advised to calibrate their purchases or their investments. Keep in mind that we've had an up move, which basically again factored in that the existing coalition and the existing leader of the leading party of the coalition will kind of come in with a significant majority. So obviously, of course, the maths or the arithmetic has kind of got disturbed, especially what we see right now on the screen turns out to be true. So I think to that extent, probably being a bit calibrated might be extremely useful, and that might yield better outcomes. Maybe one could use the time between now and say July, which is when you will see the budget by the new government. That period could be a period of bit of uncertainty, and I think markets don't like uncertainty, which can create downsides in the markets, and you could see downsides in different sectors at different points of time over the course of maybe the next 6 weeks. So I think one has to essentially keep these things in mind. Another thing which I would just like to bring in a historical perspective, that right now we think probably that if there is any, basically the outcome has not been in lines with which was expected, may not augur well for capital goods, or not augur well for manufacturing, or may not augur well for real estate. But keep in mind that if one flashes back to 2004, when of course the outcome was totally different and we saw a sharp cut, but after that, we saw the bull market continue in India. And that bull market went all the way up to January 2008. So if I were to kind of use a similar corollary to what happened then, we probably had the lows of the markets in 2001 or 2002. And after that, we had a 6 to 7 year bull run. Similarly, if we assume 2020 to be that low point for Indian markets, from there, this bull market could at least have a lot more legs than what we would imagine. And I still think that the leadership, which has been with sectors like energy, manufacturing, infrastructure, real estate, that pack may still not lose the leadership. So I think we need to keep in mind and look back at history, what happened then and what happened now. What changed in 2004 was that post-2004, PSUs as a pack underperformed. And that essentially we have to bear in mind, that maybe the PSUs, which have run up so dramatically, quite meaningfully over maybe the last 2 to 3 quarters and over the last 2 to 3 years, There, I think probably there might be an elongated speed breaker, provided what we see on the screen right now turns out to be true by the end of the day or by tomorrow morning.
Singh Saab, Tamanna here. Great to speak with you today. And I think today is also a day for a message for mutual fund investors and investors overall, not just those who are looking at the screen today and the markets today, because they have put their faith in the long-term growth story of India, and that doesn't change, is it?
No, definitely. Long-term growth story remains intact. And this is the time when people have to start contributing more and more to participate in the growth story of the country. It looks like, I mean, yes, short term there will be some volatility, uncertainty, which we are talking about, but long-term story definitely continues to be unweighted, and more and more people, and actually these corrections giving the chance to the fund managers to deploy their cash or whatever money is coming in at a right kind of valuations.
Well, Mr. Singh, another quick word from you on, would you consider rebalancing your portfolio at this stage? Maybe a market neutral strategy, move from broader market stocks to more large cap focused names?
See, it's an ongoing journey which keeps on happening every day in and day out. But definitely, when these big moves happen, that gives a better opportunities for the fund managers to rebalance their portfolio, keeping in view what is in store. So definitely, they'll be taking calls today, and not only with us, but everywhere. This will be happening. These moves are definitely helping the fund managers to rebalance their portfolios. That's correct.
Okay. And Mr. Singh, just one quick follow-up. Actually, the same thing to Nilesh as well, post that. The other macro, right? There is a large dividend which might help push, I mean, keep the fiscal glide path intact. There is a JP Morgan bond inclusion due. What about a bond portfolio currently? Is it a good time? Also because the optimism around equities in the long term stays, but in the short term might get tempered a little bit.
Yeah. Yeah. No, two parts. As far as equities are concerned, any player who is coming through mutual fund route is likely to come for a long term, and is coming through long term. That is being certified by the SIP story which is there. That continues unabated. Whatever numbers we have, every month we are adding more and more number of people joining the equity markets for long term. That stays. And now $3 billion coming every month through mutual fund route in maybe next 6 months is going to be a great stabilizer for the markets. As far as fixed income portfolio is concerned, yes, there is an opportunity. If you look at it last 2 days also, especially after the great dividend given by RBI to the government, there's definitely this thing that the deficits will come within range. And now there are so many news, JP Morgan index inclusion, as well as other global factors are definitely hinting towards that. One, our currency is going to remain stable, and second, there's more and more interest of people from outside India also to putting more and more money into the fixed income portfolios for a long term. So that is there, and that is also evident for the last 2 days. See yields cooling down, and that's something. Sooner we participate, better it will be for the investors to make more money into the fixed income portfolio.
Nilesh, do you think the focus will now very quickly move to policy on the 7th, followed by the budget? And as much as till yesterday afternoon we were talking about how FIs would be so disappointed, they missed the rally, they were sitting short, they were hedged. It seems like they might be having the last laugh in today's session. But what do you feel? What happens between now and the budget? Would you consider rejigging your portfolio at all?
Oh, absolutely, Samina. I mean, obviously, it's not going to be a major overhaul because our portfolios are a bit diversified. Yes, there would be a few sectors where we probably have larger allocations, but as we speak, we don't own any state-owned stock or any PSU stock. So to that extent, one doesn't need to change much. But yes, I think a lot of stocks which one probably had given a pass because of elevated valuations, if we essentially see softness in stock prices, we would essentially be proactively looking at them and wanting to invest into them. So I think, like what I said earlier, that some of the pillars or the pillars in terms of the investment canvas remains intact, which is on one hand the energy, the manufacturing, the infrastructure space. I still think that I continue to believe that they will continue to lead the bull charge. Then there's, of course, the steady compounders or the long-term compounders, which essentially are the financials and consumer names, which essentially continue to move on. And lastly, I think online businesses, digital businesses, niche technology services, which are more a global play, will also essentially be a part of the portfolio. So I think this broadly remains. I think the area that one has to be a bit careful about is the PSU pack. And also, I think in terms of the infrastructure and the cap goods, you probably will get more attractive entry points over maybe the course of next 4 to 6 weeks.
Okay. Gentlemen, we'll leave it at that. Thank you so much for taking the time out and being with us. Really appreciate both of you talking to us on this very important day. And clear view, viewers, that the long-term story, of course, stays intact. Short-term, there could be some trepidation as we